It has been a volatile fourth quarter, kicking off with plenty of potential catalysts to push the markets in either direction. Joining me now is Christian Magoon, CEO of Amplify ETFs, along with Jay Jacobs, U.S. head of equity ETFs at BlackRock. Gentlemen, welcome. And let's start big, Christian, because you noted that the fourth quarter is historically a little bit rocky, but it can finish higher despite concerns around the Fed, the government shutdown. What gives you confidence?
Yeah, well, there's definitely kind of this early period of the fourth quarter, October, that's been the worst month for volatility. But as we get through that fourth quarter, we generally see the best quarter of the year, double the average annual return versus the other quarters. And I think, the U.S. consumer and some of the progress that is being made on debt issues here, even given the shutdown dynamics, should actually get us out of the woods. Bear markets are tough, but oftentimes bull markets crawl up a wall of worry. It seems like one of these wall of worries that's going to dissipate, and we're going to have, I think, a good fourth quarter that's historically 80% of the time positive, going back to 1950.
It's interesting you mentioned that because, Jay, I was looking at the historical performance of the S&P 500 during past government shutdowns. Market always goes higher.
Yeah, I think people are really focused on the long term. And what we see in the fourth quarter is a lot of repositioning of portfolios. A lot of advisors are having conversations with their clients. There tends to be a fair amount of money in motion heading into year end. Right now, we still have a tremendous amount of cash on the sidelines. So we're really looking at that to see how are investors going to deploy that cash as we're at record highs, but also seeing some really positive catalysts with enthusiasm around earnings as well as potentially rate cuts going forward.
So you're bullish going into the end of the year as well?
I think there's a lot of strong momentum, but we're also just going to see a lot of repositioning of portfolios for people to prepare for 2026.
Christian, one asset that continues to gain a lot of interest is gold. All-time highs as we watch the S&P 500 nearing similar levels. Can this rally continue? Are there other alternative ways to play this?
Yeah, this whole debasement trade, the gold is benefiting from the store of value. Also, silver is benefiting as well. Silver's a little different. About half of silver's demand is due to store of value. The other half is industrial use. When we say industrial use, it's these AI chips, the data centers, batteries, solar panels. And that's really propelled silver to gain over 60% this year. And specifically, we think the silver miners, junior silver miners, SILJ, we have the ticker for the only junior silver miners ETF in the U.S., has gained over 130%. So miners have a leveraged upside. They also have a leveraged downside. We see silver going from the high 40s to into the 60s over the next 12 months. We're in the sixth year of limited supply in silver, and the trends from an industrial standpoint are only getting more bullish for silver. So we like this as a way to kind of hide out or maybe profit during times of uncertainty.
Jay, whether it's gold or silver, what products do you think are ways to capitalize on this rally?
Well, we've seen a tremendous amount of flows into IAU, which is the iShares Gold Trust ETF. We've also seen significant flows into SLV, our physical silver product. But there's a lot of interest in Bitcoin as well. I think a lot of this is really a trade around looking at global monetary alternatives, non-sovereign assets that could potentially be a store of value, but really are going to behave very differently from stocks and bonds. If we continue to see, geopolitical uncertainty, continue to see inflation uncertainty, people are looking for assets that live outside of the traditional system that can be a bit of a portfolio diversifier.
And walk me through the IVV. That's a two-laddered buffer product. How does that work?
Yeah, so IVVM is our moderate buffer ETF. It just changed into a laddered strategy. So basically every month it's going to be rolling out of one quarterly buffer position into another. This creates more of a kind of a smoother ride for investors who are looking to have hedged exposure to the S&P 500. They get some measure of downside protection, about 5% on the downside on a quarterly basis. And they're getting that by capping some of their upside exposure as well. So going back to those people on the sidelines, that's $7 trillion of assets held in money market funds. People who are looking to get invested but want to have guardrails, a little bit of protection getting into the markets, IVVM can be a great tool to do so.